Good morning, good morning. Welcome to today's live stream, Thursday morning. We are live on today's ad-free live stream. If you're here for the first time, my name is Tyler. Welcome. Super pumped that you're here this morning. And I'm going to be here to help navigate you through the wild world of day trading futures. During these live streams, I'm going to be breaking down live price action, sharing my daily trading bias and real-time trades to give you a front row seat to all of the action. No fluff, just the good stuff. Good morning, Angel Trader. Now, if you're watching this after the fact, you can jump right down to the key moments using the chapters markers below, as long as I'm able to get to it. Sometimes I don't actually get there. But you will be able to find on all of these trades all of a detailed explanation so that you can learn exactly what I was thinking and why. Now, for those of you looking to take your trading to the next level, I got a special discount for my trading community. You can use the code DTJ to get 80% off your next eval account with Apex, where it is $29 for a 25K account and $33 for a 50K account. And I'll be trading 5 450K accounts and one 25K account for our trading today. So with that, let's go ahead and get started. Let's open in prayer. Father, we just honor you this morning. Father, we choose to do this trading with you, not under our own strength, by the strength that you give us, Father. Thank you that you've given us the ability to produce wealth. You've given us that ability to see the market, to know how to be patient and wait for those A-plus setups. Father, we reject greed. We reject selfish ambition and lust for more. And Father, today we receive what you have for us. We receive it. Father, I pray for those that are a part of this stream that you would bless them, that they would see increase by the work of their hands. In Jesus' name, amen. Okay, folks, let's rock and roll. Let's get going. I have not seen the charts yet. So let's take a look and see what we have here. Good morning, Ava, Winner Circle, Ted, Vega. Good morning, Ted. Good morning, Gutenberg. Good morning. Okay, let's start on the higher time frame. We're gonna jump to the daily. Okay, so what did we talk about yesterday? Really briefly, what did I say? I said if we don't hit this low, there's a really high chance we're gonna hit the high. Boom, baby, right there. So now the question is, we hit this high and closed bearish. We have relatively equal lows here. So on a daily perspective, on a daily time frame, we're going to add our lows and highs while we're doing this. I like the downside probably more than I do the upside. Now, we'll find out what, and as far as narrative, to see if there's anything else. But we could see, we went up here, wicked it, but then we closed bearish. We left this gap here this morning, and it looks like today in the pre-market, we've already filled this gap on the daily chart, okay? So that leaves us sitting down here with a lot of open space down here. Now, you can't bet against all-time highs, so we need to be cautious as we look for lower prices. But, I mean, with equal daily lows, that does look relatively attractive. If we drop down to the 4-hour, we got this candle is going to be closing in 38 minutes. That's going to be at 10 o'clock. This is going to be closing. So we'll see where this closes. If we close lower, but we don't run these levels, we could see a rejection of that and then come back towards it later on that 4-hour candle. Outside of that, the downside does still look pretty nice for as far as this imbalance that still needs to be filled. On the hourly, we still got this hourly imbalance there. We got London lows down here. The hourly did not close this fair value gap sitting right here. So that's interesting as well. And then we are starting to get down into the 15-minute. We still got this 15-minute. This is going to be interesting. I want to keep an eye on this level right here, okay? Why that one? Because it's the lowest 15 minute, and usually when you start seeing 15 minutes, you can see price stop inside those 15 minutes. So this is a BISI. So we're going to mark that because out below that there's nothing else but liquidity. So we want to see how that reacts. We have a breaker here that looks like it's somewhat rejected already. And then that brings us down to the 5 minute, and let's bump over here to the 1 minute, and let's mark our levels for our new day opening gap. Where we got here, right here. Do we got a new day opening gap? Not really. Here's where we closed, and that's where we opened. So I'm just going to mark the close of yesterday's price action. Today's 11:14. And then we're going to find our midnight open. Here's midnight open. Silly question. What do you got? I asked you a question on what 10 handles means for you. It means 40 ticks or 10 points. 10 handles is the same thing as 10 points. I don't know how. I think I learned it from when somebody was talking about it, and I just got used to saying 10 handles. So 10 handles is 10 points. It's 40 ticks. All right, so this is our midnight open. This volume imbalance is still messing around, so we're going to keep leaving that on there for right now. And then we still have our new week opening gaps up here. There is no new week opening gaps lower. We're going to get rid of this one. Okay, so I think that is good. As far as a opening range gap, we got 6 minutes left. Our opening range gap will begin here. 414. I don't know why there. That doesn't seem right. Why is that there? I don't like that. I don't know why it's doing that. Opening range gap should be here. Looks like we're going to have a decent opening range gap this morning. This is that 15-minute BISI I mentioned right here. Price could find support in this and then move higher, or it may break through it. We'll see what happens at the open. Okay, I'm pretty much set up here. We're going to get a couple other things. I got to get my copier set up, but I have everything set up to take the 930 model here. I'm going to be doing that right at the open. And let's get rocking and rolling here, folks. Code's DTJ. If you want to come along on the Apex journey with me, I'm currently at 5 funded accounts. I was at 10 back in July, but had a big falling out with a left an order on and didn't realize it. All right, 3 minutes till open. Morning, Alkai, Jay, Greg, good morning. ERP, good morning. Josiah, how you doing? Abyssi, it's buy side imbalance, sell side inefficiency. It's a qualification, or it's a classification of a fair value gap. It's the type of fair value gap. I'll explain it more here in a little bit. Bullish fair value gaps are BISIs. Bearish fair value gaps are SIBIs. S-I-B-I. Sell side imbalance, buy side inefficient. All right, we got 1 more minute till open. So it looks like we're going to be somewhere around there. Looks like decent size. High is 166, low is 132. So we're going to have about a 30 handle opening range gap here. We have, look at all these relatively equal highs on the 5 minute. It's nice low resistance liquidity here. I like that for an initial push higher. I think that's very attractive. And there would be a long right here. A close above this right at close would mean a nice push right to these highs. All right, just like that. Boom. That was an easy trade. 930 worked out just fine. And now let's see if it wants to push all the way through this low resistance liquidity up here, which I honestly expect it to do. I'm still not quite ready on the 930 model. I'm still not doing any copy trading. I'm still testing it out. But it's at an 83% win rate right now. So far so good. All right, let's watch these levels right here, see if it wants to find support at this breaker. What the heck? What happened? I don't know what's going on. My brain feels foggy at the moment. Well, don't be taking any trades. I like that little reaction right here on the 1 minute on the breaker. I'm not sure why my other chart is not working in QZ 2024. We might need to... Let's just focus on this here. Do we got any news today, folks? I haven't even looked. FX calendar. Today's Thursday, 8:30 core PPI, 10:30 natural gas, and crude oil at 11. So it looks like we're pretty much free to rock and roll this morning. What did the 8:30 candle look like? Here's 8:30 right here. Really didn't leave any type of wick, so... 30-second closed. Here we have another 30-second right here. Let's see if we can get this to close above without running this high. And we would have this low resistance liquidity right here. And this high. We close above that. We did, in fact, close above. I clicked the button, but it did not take the order for whatever reason. So I'm going to sit back and wait, see if we get a retracement. Could go without me. I mean, it looks really nice. Off of the midnight open, off the breaker. Got a small volume imbalance right there. That was enough for me to see that. 65, 75. Let's see if we can get to there.
Order submitted. Order submitted.
We didn't run the high yet. Once we run this high, I'll be moving my stop to break even. Oh, I'm not liking that. Stop needs to be down here to allow that. Okay, stops at break even now. We just swept that high. Okay, stopped out at break even.
Order canceled.
Make sure that I'm completely flat there. Okay, I'm flat on that. That should have, that's disappointing. Got stopped out on break even on that trade. Nice little wick. It filled the volume imbalance sitting right there, right before 8:30. Let's see what happens here. That was a good save. I tell you what, once you hit that, you got to move stop to break even. Failed right there. ES looks heavy. It swept its highs. And NQ did not. There's a, that's not a close, but we're going to wait and see what happens here. Morning, Sandra. Jury, good morning. How you doing? Welcome. A nice breaker right here. High, low, higher, high, breaking low. We just tapped it. I just am a little late to seeing it. It's these kind of, excuse me, it's these kind of breakers that I want to get better at. I tend to miss them. Those ones right there. This is too not enough reward for the risk on taking this breaker or this inversion right here. We closed. The stop loss has to be right there. It's just not worth it for me. We got some levels here that we need to fill. Man, that sucks. I wish I paid attention to that. Price action is looking decent. Grab liquidity here, filling this fair value gap. And this is the direction I wanted to go anyway. So we got liquidity here. Let's see if we can get this 1 minute right here. See where we close. Oh, this is a 30-second. What does the 1 minute look like? It's probably going to go without us. Yep. There's that 15-minute SIBI. See, or BISI. Let's see if it pushes through it and runs for these lows. Holy, I mean, called it. I just missed it. What's going on with this? Why is this not working? We do have this low resistance liquidity, but we got these equal lows down here. I mean, that's really the interest level. So we're going to see where this 15-minute closes in the next 2 minutes. We got this 15-minute BISI right here, and the 15-minute candle is going to close in a couple minutes. I wouldn't short that breaker with such a big wick on the 15-minute. That is what you want. These wicks this 15-minute wick is on a lower time frame the market maker sell model. That is when you can get what I just said, that is where magic's made. Wicks are market maker sell and market maker buy models on lower time frames. Here's the market maker sell model. Right there. Here's the wick. Market maker sell model are wicks on higher time frames. They're beautiful, especially if you know the bias, which we wanted to go short. That's a little annoyed. We're just too far in discount right now for me to want to take something. Price action is looking really nice. If it's going to continue, it should respect that breaker. Or excuse me, this order block, this bearish order block. It tapped it. Let's see if it respects it and moves lower. Did I mark out 9:30? Where's 9:30? Right here. And it was above 9:30. That's just a beautiful setup. All of this here. Here's even a breaker here. High, low, a higher high in regards to the bodies. We broke below it right here, 9:30. This candle right here tapped 9:30, barely, or just underneath it, and then fell. We'll get another one. I don't think low of day is set, young man. Thomas, I don't know if you're young or old, but I was about to say young man. The target's here. Target is the previous day low. That I would not be going long with those there. That would be a fatal mistake. Doesn't mean it can't go long. What I'm saying is this is too obvious. And it makes no sense to want to go long when you have these levels here. These will be ran before we have any long opportunity, in my opinion. We may get a retracement. We could get a retracement like up to here or to the this BISI right here, but we will run these, no doubt. Got another order block right here. Let's see how it respects this order block. That would be a short if you think this is the draw on liquidity. It is. I mean, I think it is, but I wanted to take my short up here. And we're way down here. Do you see that? Like the risk, which one seems less risky? Yes, hindsight is 2020. This seems less risky. This seems more risky to me right now. 15-minute closed handily underneath that. And if I'm honest, I think we're going to run this low. We'll get some type of, I think this is what I would expect for today. We're going to get this. We're going to come up to these levels right here. This is a breaker. We're going to come up to that level, and I think we push lower. That's what I think the day is going to look like. When I look at the daily, it just supports that type of narrative, reaching down into this fair value gap. And also coming up into this order block right here. It's a bullish order block. That's where I think price is going to go. 30-second. Do we have a... Oh, we're already on the 30-second. Dang it. Do I think we're going to get all the way to that order block that I marked out? I don't know. That's quite a bit of ways. That's a ways away. That's way down here. I mean, we're talking 300, 400 points. You know, it'd be really nice to see. Here's what I could see happening with the 4-hour. If the 4-hour doesn't run this low, two things could happen. If the 4-hour doesn't run this low right here, we are leaving it here. It retraces, grabs liquidity up here, and then runs it, or we wick below it and move lower and then retrace. Well, I'll just have to see how it wants to close. Because this will happen from time to time on the 4-hour, is the 4-hour will retrace before it actually hits the key level, and we know these are the key levels, so we look at this as a fake reversal. We look at this, I'm looking at this as a fake reversal. I would not be going, oh, this is going to go long. I could be wrong. I've seen when we had these equal lows and it didn't get it for a week straight. For a week straight, it didn't get it. So it could leave it right now and just run the other direction. Here's an inversion. That's a nice inversion long. But I'm not opposed to playing the this move higher. Even though I may think it's not going to see very much. I'm looking for 10 to 20 handles. That's all I'm looking for. And if it wants to just collapse on me right there, I'll take that. Sweep of high. Breaker right there. Man, I need to see these breakers a little bit better. I would have taken that short for 10 handles. You've been on the stream for the last week. I've been trying to mark these out more frequently because I've noticed that we can get 10 handles fairly easy once we hit that level. If we were to went short, would we have gotten 10 handles? Yeah, there's 12.5. That would have been 12 handles. Sorry, I don't know what happened to my camera, guys. I tried to restart it, and it's not coming on. I'm watching this inversion right here. This is a large inversion here. It's a big handle. 15 handles.
Order submitted. Order submitted. Order submitted.
I'm going to take the 50 handles. Excuse me, 50 ticks. Ran the low right there. There's a target. Nice, quick, easy trade, folks. 10 handles in and out. Take the risk off the table. And we're sitting nice. Nice. Nice, nice. I am going to close those accounts. I mean, once you get something like that, you just got to be done. That's beautiful. Amazing. And that was on that was a mini contract, so I increased my size to a mini. And I was doing 5 micros, but I have increased to a mini. I think the target's right here, folks. I think the target's right here. Now, it's just a matter of this is the time that it would run. So this is what I'm thinking. I took mine. I just wanted to I'll take my 10 handles and get out. It swept it right there. I'll take it and get out. So right now, what am I? I am 2 for 2 with 1 break-even trade today. Did the 930 model and then took a break-even trade and then took this trade. Let's see. Now, let's watch this. I think the 4 hour is not gonna close below. I don't think the 4 hour is gonna close here. So the way I would view it, actually, the only reason I'm talking about it is because I'm documenting it, because reading order flow is a skill set and there should be accountability to it as well. But if this 4 hour does not close below this, okay, I'm gonna look at the next 4 hour in this context. It's gonna be in the power of 3. So let's just say we close right here. First thing we get is accumulation. Then we would get manipulation. Then we would get distribution. And then you get your consolidation. This is what I would expect for the next 4 hour candle. It would look like this. So we close here. It's going to act like it wants to run the other direction. But really the draw on liquidity in my mind, and if I have my draw on liquidity incorrect, then this is wrong. This is why learning higher time frame order flow is so important. It's the bedrock to any analysis. So I'm doing this based on a higher time frame analysis that these previous day lows are going to be ran. So if I'm using that as my premise, everything is based on that. This is annoying me that my camera's not working. This is the premise I'm going to go off of. So if that's the case, the next 4 hour candle should have a structure like this: accumulation, manipulation, distribution, running these lows. Okay, that is what I would want to see. How high does this go? I don't know. Could I be wrong? there's always, always, always risk. There's always a chance. You have to plan on being wrong. That is always a possibility. But the better we get at this, the more consistent we'll see in our trades. So I was hoping here that we were going to get that push lower, and we obviously didn't, and I was just willing to get my 10 handles and get out. Okay, got my camera back working. So that's kind of what I'm looking at for there. Angel. For right now, that model is within the Purpose Driven Trader Academy. I'm sharing it first there. I'll release it in the future. I just have no timeline on that. But it will be available for those that are inside the Discord and inside the Purpose Driven Academy. If you are interested in that, if you want to get it at the lowest price I'll ever offer it, the wait list is going to close here tomorrow evening. And if you would like to get on that wait list, you can join that wait list right here. I'm going to drop it into the chat. And you can join the wait list there. That wait list will close tomorrow night. And then I will be sharing the sign up on Monday, and that link will be available at the lowest price it will be for 5 days, 3 to 5 days, and then it will close. And then once it closes, I'll be releasing the Academy to the general public at a higher price, more than likely on Black Friday. And that price will still be lower than what it's going to be in the future. So I'll be doing a discount on that day as well, but the lowest price will be for those on the wait list. And I'm still testing out the 930 model itself. I'm really liking it. The goal behind it was to give brand new traders an easy set of rules to follow. Okay, so look where hang on, let's pause for that for a second. 4 hour just closed. So if I'm looking for a move, I would prefer this to start moving higher right now. Consolidate, I would prefer it to start running higher. Now, if we run the previous day low on this candle right away, if we run this low right now, my analysis will change. So your analysis is dynamic. It's changing as the market is changing. I just have something that I've seen happen over and over again that I'm planning on wanting to see happen. But we need more candles to see if it's going to flesh out that way. If we run this low right now, which is very possible. I'm not saying I know everything, folks. I don't claim that at all. But if we run that right now, my analysis would change to more something like this, I think. And we could consolidate up here, or we could keep running lower. But that's what I would want to see. We could just wick these highs and then drop aggressively lower. But it all depends what we do in the next 15 minutes, basically, on this 4 hour candle. But going back to the 930 model, the 930 model is designed specifically for brand new traders that are taking or that are committed to education, because education takes a very long time. This journey has been 18 months for me, and that's just since I came across ICT. My journey for trading in general is over 2 years, and it is hands down the hardest thing that I have done. What I wish I would have had was a model that would start giving me wins right away. Not huge wins. These aren't big wins. That's not designed to give you $1,000 day. It's not designed to do that. But it's designed to start seeing you profitable immediately, to scratch that itch of, man, I want to make money scratching that itch so that you can commit to the time that it takes to really become a top tier trader, because that's what we're looking to do. We're not looking to do this as a side gig. We're not looking, if you're trying to do this as a side gig, it doesn't allow for side gig status. The demand it puts on you is not a side gig demand. It is a full-time gig demand. And if you only have part-time time, then it's going to take a much longer time for you to learn this full-time demand occupation. And I wanted to give a model that could start giving wins right away. There is zero bias. There's no guesswork. There's no question marks. There's no what ifs. It is like, here's the rules, follow the rules exactly, and you will see an 80% win rate. So far, that's what my rate is, an 80% win rate. So that's going to be inside the Academy. The link, I just dropped it right there for you to check out. We'll be releasing the Academy to that list, to those on the wait list on Monday. I am so excited because it's not just the Academy, it's the Discord, it's the community that I really want to build. Look at this low resistance liquidity right here. Let's see if it runs right now. I'd like to see it just run right through it. We swept this low right here. Didn't run these equal lows. So let's see if it wants to pump higher right here. We also have that inversion right here that's still standing. So right now, this is the analysis that I want to see happen. I want to see something like that. That's what I'd like to see. DCA, what is that? What is DCA? Sorry if I don't know. There's so many freaking acronyms in the trading industry that it's easier for me to just ask you to tell me what DCA stands for. Dollar cost averaging. So I believe Apex did allow you to, it has now is allowing that. Full numbers on the chart. Is it not there? On the right side. I'll fix that. I won't be able to do it right now, but I'll work on getting that fixed next time. Yeah. Good news is you can see it on the right side. I think that's why I didn't care, because I have the middle numbers right here. These middle numbers are the exact same. They're just obviously on the 5-minute level. So you can see where this black box in the middle is where price it currently is. Yeah, so I believe they do allow it. I'm going to tell you, though, they will not prefer it. I can tell you that right now. Because the way I know that is they have come out and said that the traders that have gotten denied in their payouts are those that got in at said price right here, okay? They got in right there. They want to go long, but it starts going lower. So let's say they average down right there, right? And then it goes a little bit lower, and then they average in right there. Now, the thing about it is they may still be within their trailing drawdown limit, but then when it averages down and then it comes back up and they go to right here, they sell their position here. So if I was to put a chart on this, it would look like this. They allowed that much drawdown for that little profit target. They do not like that. They don't want this. They want to see it looking like this. That's what they want to see. There's the entry, folks, right there for this high. I'm not taking it. I'm done trading on the day. I got all my profits that I wanted for the day, so I'm not taking this. But this is a fantastic trade. Here's your entry. Here's your stop loss. There's your target. Let's look at the 30-second to see if we have a swing high. We do have a swing high right there, so we need to move our stop to break even right now. Stop loss has to be a break even. We ran that high right there. Okay, so that turns into a break even trade right there. And here's why you have to do that, because this happens so many times when we grab liquidity. And so we grab liquidity on that 952 candle. And that 952 candle, just that tiny little wick, see that little wick right there? That little wick, we ran it, and then now we move the other direction. This is the break-even strategy that has saved me thousands of dollars. I just dropped a video explaining all the details on the break-even strategy. I just posted it, I believe, yesterday. But that is so important. This trade worked out nice. This trade is a legitimate trade setup, but it failed. That's okay. Not every trade's going to work. You're unable to get the 30-second interval. That's tough. I like the 30-second a lot for the inversion model. If you can't, then only do the 1 minute. And you'll just have to run with what the 1 minute offers. You can still do it. This trade still is valid on the 1 minute. There's the 1 minute right now. So let's just see if it plays out. It doesn't allow you to move your stop to break even as quickly. So here's that. Your stop loss would be a close below that level there, targeting this high. So the 1 minute's still active. I can't either on my TradingView. I signed up for the lowest level. Are you saying it's not working today, or you don't have it at all? This is my paper account. So if you're looking like, what's that negative number? It's a paper account. So Sandra, what you need to do if you can't see the 30-second, if you're on the 1 minute, you need to look at where this stop loss would have to be, and you need to size down accordingly to make sure you're following proper risk management. So if your normal lot size is, or the normal size that you take is 1 mini contract, and this is too big of a size, then you need to go down to 5 micros. So that your stop loss is still the same dollar amount, even though it's a larger stop loss. This just protects you. Blue blow-in ox? I don't know. I've never heard of that. Okay, there's the close. So that trade on the 1 minute officially failed. I'm not going to lie. I've been noticing this lately, and this seems to have started more frequently. I'm noticing it slowly drop down like this, fail, or close this inversion or this fair value gap, and then it explodes higher. This is not the first time I've seen this, and this is a relatively new development in just my own personal experience that I'm noticing. Now, I've also seen the other happen. When we close below this, we just drop aggressively. So it's hit and miss on being able to hold through the close of that. I would still rather close to protect from the fallout. But that right there, you can always, I guess you could always re-enter. But who wants to re-enter on a failed inversion? I don't. I don't like that idea. But my point is still the same, guys. You notice how the 4 hour, even though we are 15 minutes in and we haven't ran that low on the 4 hour. This 4 hour candle, I mean, I just have high conviction that it will eventually run this level. Yeah, it's 4 hours, but the first thing we should expect is displacement higher, a push higher. How high? We'll have to wait and see if there's any opportunities. Vega, yes. So the Black Friday is not going to be as low as it will not be as low as those on the wait list. Not at all. I want to honor those that have been here and that have signed up to be a part of the community. Because my ultimate goal, if I have a bigger goal, it's not necessarily about the price, it's about building that community. But there's also a lot of time and effort that has gone into it and will go into it on my part in the future. And I just need to make it worth the time. When do we get the news? There's news at 11. That's orange folder. There was 10 o'clock news that was yellow folder news, which is nothing. We are no. Yeah. It's just too obvious to want to go long. I just wish we were a little bit higher. What we can do, if we were to let's pull a Fibonacci on here. And let's mark out our highs. So look at this, very interesting. From this high to this low, equilibrium or the midpoint is right here, and we ran that right there. We may not go any higher. It technically went up to the point that it needs to. I mean, I wish I saw this. I took this right here, this breaker. 10 handle trade, 50% level of the range, nice displacement lower. That would have been a nice trade. Ranging, Eva, I would call it consolidating, not ranging. This is what happens before a big move. It consolidates. This is consolidating. We don't want to take trades in this. Consolidation is when most people lose their funds, lose their accounts, start, you start chipping away at your account because it's going lower, higher, lower, higher, lower, higher, back and forth, not ranging. It's consolidating. And it's consolidation. When you see this, when you can see this right here, we're on the 1 minute. When you see lots of wicks, you need to tell yourself, stay out. When you see displacement, that's when you can consider getting back in. All right, here's potential displacement. This trade, in my opinion, I would have wanted that to see work out. Now, did it? No, it didn't. So that tells me consolidation is not done. Stay out. So we see this doing this thing right here. Stay out. It could be a fake out. It could be real. If it's real, well, guess what? We're going to find out it's real, and then we look for an opportunity after we know it's real, not before. Right now, many people would be taking this going, oh my gosh, I can't miss this. Now we know it's a legitimate candle. It closed below this. Still no trade opportunity. Still no trade opportunity. It's probably going to run this low. It's probably going to hit it. That's okay. There it is. Let's see how this candle closes. Does it close aggressively through it, or are we keeping the bodies above this? And do we see a reversal? That is now what we're looking for. Looks to me consolidation may be complete. Now we just don't know if we want a continuation lower or if we want a reversal. Those are the things that I would be looking at. Now I'm partial to a continuation, personally. I'm partial to a continuation. And I'd be looking at seeing if price could come back up to this level here. That's kind of what I would be looking for. It overlaps with the breakers, some levels right in here that look interesting. But you obviously do not want to go short right away when we've already hit this level. The only way I would want to go short is it would look something like this. We break lower, we come back, retest these levels. We retest these levels here, right? We retest those, and then we see price moving lower. We want to find that support underneath the previous day low. We want to find that it doesn't want to move back up through it. If we find support and we stay above it and we move higher, that's where we could see higher prices, and maybe in the PM session, then we move lower. I mean, look at how smooth these highs are, guys. Look at that. Low resistance liquidity. We call that a trend line. I see that as price wanting to come back up here and run through it. Now that we hit these previous day lows, I like that. We could easily, I'm just coming up with scenarios, guys. I'm not saying I know what's going to happen, but this is what you do to come up with ideas, and then you're like, oh man, that looks good. Oh, it's doing something. Maybe there's an opportunity here. We could easily run those levels and come back down here. Easily. So I think that's definitely in the cards to consider as far as opportunities. Where would that opportunity be? It would be either here's an opportunity to take a long and discount. That looks nice. I like that. We hit liquidity. We grand sell side. There's definitely opportunity there. 100% opportunity. But we may just be too heavy. Yeah, I remember bringing that up. There's that old opening range gap. This has been unfilled since the 6th of November. This is an institutional order flow entry drill. Look how we wicked barely into that. Barely went into that, and we're getting displacement. This is a sign we could see lower prices. Sign meaning we have to see it actually do it. It's like a signpost telling us the way. We have to see how it wants to react to this level, though. Yeah, I do like this level for a long, especially if we get back up in this area, especially if it's aggressive. This looked nice. I'm not going to lie. I don't feel bad for calling this. This looked nice. The only thing that it didn't do is it did not run this low right here. So it couldn't classify as a plus type setup. This one could. We swept this liquidity here. All this low resistance liquidity here. And if we are aggressive through this, that would be a nice opportunity. Do you have a lag? It should be about 5 seconds. The lag on my chart to your chart should be about 5 seconds. So remember, I will say this, going back to the daily here. There is, I've talked about this every day because I think it's significant. We ran sell side liquidity here. The odds of us running buy side liquidity here is 12%. It's a very low probability. So we can look for longs here, but don't look for it to run the previous day high. Very rarely will that happen. Here's an example of one that did. We had a small day where we barely ran this high. We stayed on the upper portion of the previous day candle. And then this candle runs that high and runs that low and then closes inside. But most of the candles you are going to see are going to be a single break day where we break a single previous day high or low. In this case, we ran the low. Yeah, I mean, this looks This looks like a potential a market maker buy model. Consolidation, accumulation, distribution. A 73 to 87, that's a big stop loss. That's 15 handle, or that's a big stop loss you'd have to have if we close above this. What I would like to see is if we can get an order block put right there, and then we close above it. This order block, a close above it, and that provides great confidence for a move. Now, I will say on the higher time frame, this is an order block. On the 15 minute, this is an order block right here. So we'll see where this 15 minute closes in the next minute. If this 15 minute closes above this low, then we don't have an order block yet. Too early. There's 40 seconds left on this candle, which sucks. We just hit this volume imbalance right here. That's where that candle stopped. This is like a 30 handle stop loss, guys. I mean, this is very, very hard to want to go long on, right? Because the chance of it coming back down here is pretty great. So because it's already so high, I almost prefer to wait to see it do that if it can, without running these highs. We may not get that, or we may. Let's see if we get that push lower. That could have been it right there. I'm going to be this is a demo account. This is a paper trade. You should not be following my trades. I'm playing this out for my own benefit here. Seeing if this was the only manipulation we get. Stop loss would still have to be down there. That's very large with your profit up here at these highs sitting there. So it's roughly a 1-to-1. I just don't like I really hate that it closed this high. And if anything, this is going to tell me why I don't take I would have never taken this on a personal account like this. Never, 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 ever, ever, ever. And I'm doing this because I'm showing why we don't do it, and to reaffirm to me why I don't do this. Because the drawdown can be so large. Now, if you do a single micro with this is 40. It's $50. This would be, if it hit this level, it'd be a $50 loss. Much more digestible compared to doing this two mini contracts at this. That's $1,000. This is $1,000 loss if you were to take two mini contracts. This is why when you want to be a profitable trader, when you want to start scaling up in size, opportunities like this just go out the window. You can't afford to take a trade like this. Especially if you want to scale in size, because the risk far outweighs the benefit. It far outweighs the benefit. This risk right here. This is why you just can't, if you want to be profitable, these types of opportunities just can't be considered. And technically, it would need to come and close below this level. So let's see when and if we get that close. Now, if you still felt like we were bullish, this would be your entry. This would be a fantastic entry. Your risk is extremely low. You have a nice order block right here. Beautiful entry right there. But who wants to go long on a falling knife? This is why we just have to sit in front of these over and over again. We talk through these and we see how they play out, so it gives us confidence that this is going to play out, right? Why do I think this is going to play out? We hit liquidity. That is the main and biggest factor that gives me the confidence that we're going to run these. Once we hit this internal swing high, personally, I think I would want to move my stop up, because if it comes back down from this level, there's no way it's stopping below here. I just wouldn't trust it. So if we're going to fail at this point, I'll take that loss, because it's has a higher probability of running these lows by it failing right here. I mean, look at this trade here. If you got in when I suggested down here, this is a trade in itself. That's a 100 handle move, 100 point trade right there, 100 tick trade. That's 25 handles from just taking this lower entry. That can be a high leverage trade, because the risk is small. This is why we do it. So there's our sweep of liquidity. We need this to continue higher right here. If it doesn't, this is where we'd want to kill the trade. I'm looking to move my stop to break even. Technically, it's here. But this is when we have a displacement lower and then we come above that internal high. You want to protect yourself against a retracement here, because it can move against us right there. Still no run, and if this closes below this level, I'm probably going to be out. Because then I'm looking at this as just a sweep. Nice close. We should skid up to here. Let's see it reach up to there. And to be honest, we're going to take one off at that level. Okay, so there is our profit, our TP, number one. Now we're going to move our stop to break even. and we're going to allow this to run to these highs and see if it wants to hit these highs. Honestly, we could see higher prices at that point, but we'll see if it wants to tap us out or if it wants to continue running up to these levels here. This is where our breaker's at. But honestly, I could see this running a lot higher. I'm going to pull this up higher to this breaker sitting right here at 930. Let's see if it can keep us from getting stopped out here. Now, hopefully you guys can see the difference when we're taking an entry. When we're taking a trade, the first thing that you need to be figuring out is your risk management. Your risk, right? I took this trade as part of an illustration, but if you want to be a high profile trader, this is not one of those trades you would want to get in at this point, right? You would want to get in lower down here where your risk is a lot less. Let's move that to break even just a little bit. See if it can not tap us out. This is all about risk management. We know that our risk would have been much greater, much larger by taking the long where we did. Now, as a high profile trader, we have a greater opportunity to see success by getting in lower from our entry, planning on what would this be? I mean, look how small this is. This would have been a 2.5 loss with two contracts. With two contracts, that is $80. That's $90. Just under $100 would have been your loss here. For right now, if you were to take that position from this point, you would be up 40 handles. You'd be up 40 handles on two contracts. That's $800 on two contracts. You risked $100. You risked $100. You planned on $100 by getting in at this position. And you're profiting over $800 at this point right here with the potential of seeing even higher profits because we already ran the previous day low. A 1 to 8 risk to reward, 100%. But when you want to say, oh, I don't want to miss the move, I don't want to miss the opportunity, so you get in long here because you saw your model, you just put yourself in a very hard spot where what did we have to do? We had to weather 25 handles of drawdown with two contracts. That alone right there, that is $1,000. That's $1,000 that you would have had to handle through that. So would you rather say, you know what, let's wait for a better position and see if we get it down here? Or do we just go, oh, I don't want to miss the opportunity. I'm very bullish. I know it's going to go up here, and then have to deal through this, potentially getting stopped out, potentially closing your trade prematurely because your emotions are getting involved and you don't want to lose any more money. So you close the trade prematurely because you didn't manage your risk appropriately. This is what managing your risk is all about. We took our profit here so far. We have one left, but I called it out right here, folks. I said, this is where you want to get in long. This is where we want to get in long. This is what. This is the reason. This is the whole perspective. You can do trades like this on demo. You can do trades like this with one micro contract because you're only losing $50 with 2 micro contracts right here. $50, no biggie. I can do that. No, what do we say? No, $50, $100. No, what did I say? 25 is 40, 50. Yeah, $100. This is $100 with 2 micro contracts. Great. Well, if you would have got in along with 2 mini contracts right here, that same risk is $100, but your profit is so much greater. Your profit is so much larger. And then you're sitting back, hands off the trade, don't have to worry about anything because your entry's way down here and the likelihood of you getting stopped out again, very, very low. When I took this long here, because we were chasing this trade, yes, our model showed up. Yes, it was a legitimate entry, but I told you there's a good chance we could come back down in here, and this is what I'd prefer. The chances of us getting stopped out here is much greater. It could just wick right here, stop us out, and then run this high. This is why we want to wait for the premium type setups. Premium. We got to wait for those premium setups. So let's go ahead and let's just wait and see if we can get up to this breaker up here that I have marked out. Let's see if we can actually hit that breaker. I think we could hit this breaker and also run this low resistance liquidity. I think this is where it's going to go. Now, we may get stopped out before then. We could see a stop out, but we'll see what happens here. Ooh, there's the push. We going to get it? Up to the breaker. That's where I see it stopping. We'll see a retracement once we hit this. I would say we see a retracement once we hit this level. Just under the mean threshold of this order block. Okay? I do not, if I want to prevent getting stopped out here and I want to preserve profits at this point, I'm moving my stop loss up to just under the mean threshold of this order block, hoping that price finds support to continue higher. We are in a macro now. We should see price run. We're already in the trade. And I want to see it hit this level right here, which is the breaker. If we close above this, that sucks. We didn't close above that. Let's see if we can get a close above this. If we can get a close above this. This target from this point right here to this high with one contract, that is $770. Now, if we took the trade that I recommended for those that were watching, if you were to get in for a low risk entry, properly using risk management, from here to this high, we're looking at 62 handles. 62 handles on one contract is $1,200. $1,200, folks. You risked $100, not $100 is what the risk was with two contracts. We sold one already, but it would be $1,200. I think this close right here is, let's see if we can get a push, a wick above this. I'll take that. We'll take that. If we can get just a wick higher. I don't like these closes right here. So if we can just get a nice wick higher, it could still push up to this level. But I'm just reading order flow. I want to see if we can get one more push higher for 133 ticks from this entry. And from here, it would be 57 ticks, which would be $1,140. There it is. There it is, folks. 57 handles from the point that we would want to take this entry. At this point, 57 handles, $1,100 with one contract. Your risk from this point to this point right here is when a close below this was with one contract. It was 50 handles. Or $50. $50 risk. So we'll just say we'll round it under $100 risk because it could have went a little bit down here, went lower. $100 risk for an $1,100 profit. There you go. Guys, was that helpful? I mean, I'm probably turning this into a video, that part into a video, because that is like the epitome of risk management. That is the epitome of risk. And I was literally thinking about this last night on how I wanted to articulate risk management. How do I want to handle risk management? Beautiful. This is exactly what we're talking about the chasing. I mean, this was a fantastic, this right here was the entry. The close above this level on the 1 minute was the clear and obvious entry. I marked it out well before we actually did this. But is any large trader going to go long right here with the chance of it retracing 25 handles? I mean maybe. It depends on how much drawdown an individual is comfortable with. But when I'm looking at, right, let's just say I'm now at the size where I'm taking 5 mini contracts. 5 minis times $20, that's $100 per point, and we got in drawdown of 25 handles. That's $2,500 of drawdown that you would have had to sit through. Or you say, crap, I missed the trade, and maybe it comes down to this when it's at this point you go, oh crap, I missed the trade. I'll wait for a better setup. Then you see it coming down in here into the inversion fair value gap with this order block sitting right here, and you go, oh, yeah, we could still drop. We could still go lower, but my risk with 5 contracts or however many contracts you do is only 2.5 handles, maybe 5 handles if we get lower. Your risk is much less here. This risk to reward opportunity is much better. So I'm gonna take a shot at this. I like the way this looks. So you take your shot. Hey, you don't get stopped out. And it runs in your direction by 50 plus handles, and you are winning the day, my friend. Now, I did not take this trade on a personal account. I did not take this on an eval account. I did not take this on a funded account. This was on demo only. And do I feel bad? No, I don't. I won't. I refuse to. I decided this long ago. I cannot feel those emotions of FOMO. I made my money. I'm happy. I'm setting everything aside. Now I'm going to learn. I'm going to purely education, purely price reading so I can become a better trader, and a fantastic trade comes up. Great. That sounds great. Oh yeah, look at that. Look at the rejection on 930. Isn't that the level I literally put on there? Oh my goodness. Did you guys see that? Did you see that right there? I moved my stop because I didn't like these closes, and guess what it does? It wicks the exact level I put my... I'm still learning, folks. I'm still learning. I still don't trust, at times, my analysis. We literally called this level. We moved our stop loss up to this level down here, from down here. There it is. I'm not amazed at me calling it. I'm just amazed on the precision. I'm amazed on the precision. Guys, the thing about this precision is it means it can be mastered. It means you can create a system around it. Look at that drop. Crazy. Breaker right there. Wick candle lows right there. Let's see if it wicks up into it and continues. Technically, it could be this one here, but I like this one because the body is lower. I like the lower body on this one. Body's higher, body's lower. Yeah, Sandra, this is what that's what I've been talking about. I think there's a model that I just haven't had the time to thresh out. You guys have been seeing me do this over and over again. But I think what I'm going to call it, I wanted to call it the law of first exposure. But I mean, law is a pretty strong reference. But the law of first exposure that I'm kind of coining here is that when we are first exposed to these obvious breakers, the rejection should produce 10 handles. So here's a breaker, obvious breaker. High, low, higher, high. We break lower. First exposure. Nice displacement. Here's another breaker. First exposure. Nice displacement. It's when you try to take this model and you apply it to non-obvious breakers. And you go, oh, here's a breaker right here. Here's a breaker. Here's the obvious. Where? It's not obvious. Do you see what I mean? So I'm going to put a model together on that and put together a set of rules for it. But I mean, it's pretty clear that when price action's on point, these trades are amazing. These trades are amazing. Look at that. Look at those two opportunities we called. We didn't call it. I called this one. No, I didn't. I called that we should see resistance here in light of that concept. I saw this after the fact, and then I went short on the inversion and got 10 handles, when it would have been much better if I would have just taken this breaker. Beautiful. I mean, guys, price action today is phenomenal. It doesn't mean that we can all be green, though. I mean, it's still, I'm just talking about, like, when you see price action like this is the environment that you want to trade, and you have the best opportunity of winning. Yeah, I mean, what do you guys? If I was to call it that, the law of first, the law of first what? What did I call it? Exposure. The law of first exposure. I was trying to think of just a term that could grab people's attention. Because, I mean, this is beautiful. Hey, Vega, you bet. The biggest one that if you're going to learn ICT concepts, it's difficult to just say focus on, one thing, focus on fair value gaps, and that's all you need. You need to understand the language. It's like learning Spanish. You just need to understand all the different concepts to agree to where you can communicate why price is doing what it's doing. Having a language. For example, breakers. Breakers are part of the language of ICT. And this is one of the concepts. When you have a high, a low, and a higher high at key levels, this one was it came up and touched this volume imbalance up here at 8:30. So it wicked above it, the 8:30 candle, which was the news candle, and then it just rejected. Does that do it every time? No, but at least I have a language explaining why did it drop here. The answer is easy for me. This is a fair value gap from the news candle at 8:30, and then we have this small volume imbalance sitting right there, right? This is part of the language. Volume imbalance. There's a volume imbalance. Part of the language of ICT. Here's a fair value gap. Normally, you would combine the two to make it a volume imbalance and fair value gap. But just to see the precision of this, look at this. What did this candle do? This candle wicked up, filled it to what? To what? What? The tick. It filled it to the tick. Rejected and closed bearish. That right there was a sign, a signpost saying, hey, we could see lower prices. You get this displacement lower, and I called out this 30-second breaker right here that I did not take. I missed it because I was talking about something else. Price came back up on the 30-second and hit this level, and then it dropped. That is a signpost saying that there's an opportunity. So then once you hit a level like this, and then you see displacement, and then you see overlapping confluences or other PD arrays that show you that price is wanting to go lower, it gives you the confidence to take the entries. And that's exactly what happened here. And it's part of the language of ICT. The other thing that is very important for you to understand is key levels, right? Why did I think that we were going to go long when we went long here, which we did on demo, right? We went long here. And then I also told everybody if this is a better entry right here. But when we went long here, why did I feel confident that we were going to start running higher? Because we hit a key level, a higher time frame key level. Opening range gaps are the settlement time. So if you go right here, you'll see electronic trading hours, and then you'll see regular trading hours. If you select it, you're going to see a gap in price action. Now, I don't know why it's doing this, because it's from 4:59 to 9:30, but even still, when we look at this candle here, opening range means it closed here and it opened here. That is what that means. The previous day closed here, the next day or current day opened here. That's what the opening range gap represents. I talk about that inside of the Discord as well. And you can see it ran and filled a majority of it almost immediately. It doesn't do it all the time. You can expect it within the first 30 minutes. What's the 4-hour volume imbalance? That's from a while ago, but I saw price still respecting it. Way over here. See that 4-hour volume imbalance right there? This is from July 11th. And look how price respected that. Look at that. Look at the 4-hour candle comes, and what does it do? It fills this 4-hour volume imbalance from July 11th and runs past it by 2 ticks. This is why I don't think there is anything superior than ICT Concepts. The precision of it is incredible. Why did it stop there? Why? Why did it have to be there? Unless it was programmed to do so. But I break down every single concept inside the Trader Academy, the Purpose-Driven Trader Academy. Every concept there. Videos are anywhere from 10 to 20 minutes going over every concept, explaining low resistance liquidity, high resistance liquidity, imbalances, how price moves for only two reasons, liquidity and imbalances, breakers, mitigation blocks, institutional order flow entry drills, all of it. All of it's right there. All of it there. Order, new week opening gaps, new day opening gaps, all of it. Folks, we're going to call it a day here. It's been a fantastic day. I got other things that I want to accomplish, and I'm planning on hunting today. I want to go hunting this evening, so I got some things to get done. But good trading day. We'll be back tomorrow. If you are using Apex, please, all I ask is use the code DTJ. It's an easy way to support the channel and gives you an 80% discount. So Friday is the last day for the waitlist. To join the waitlist, the link is in the chat. And we will see you guys all tomorrow. God bless. Stay safe. And we'll talk to you soon. Take care.